Let's take a look at some charts and information on Synthetix for Brave New Coin. SNX is the ticker. They call themselves a derivatives liquidity protocol. They have staking, governance. It's lending and borrowing adjacent. They have 1.1 billion TVL, currently down significantly, mainly due to price depreciation in SNX. And how this works is you use SNX to mint synths, which are synthetic versions of various tokens, forex, equities, commodities. Really, the crypto stuff is probably the most important right now. They also have inverse synths, which track the inverted price action, which means you're effectively short on those products. Something I have access to through Enzyme. If we look at the dominance as far as what money is where, where are the longs, where are the shorts, how much is in various positions here on chain. There's a pretty large and significant ETH short presence at 11 million. And you can see most of these on the long side are pretty significant. BTC at 57 million, Link 58 million. And interesting to see that ETH short presence pop up recently. Definitely worth watching. And there's a lot of other various stats you can look at here. Trading volume is important over a long period of time. Their volumes have been up considerably in May along with everything else, and then down significantly over the past few weeks. There is a protocol fee component to this, much like Maker, slightly like Sushi. All that can be voted on and changed. So there's a lot of moving parts here for the token. For me, what's most significant is the total synth volume on chain. Where's the money basically is what you want to pay attention to for this. And as far as the UI is concerned, they're trying to make a new UI. I think they have some UI hackathon or something. It's kind of busy. There's a lot going on, but it's not unusable by any means. And like I said, they have a governance component. You can see all of their improvement protocols and potential changes that they have coming or voted on, grants, ambassadors, elections, and you have voting power based on your SNX holdings, I believe. They're also plugged into layer 2 already. I believe this is Optimism. Yeah, Optimistic Ethereum, they call it on layer 2. And if we look at TVL over time, again, TVL was up at around 4.1 billion. They were kind of leading many things at one point in time. Now it's down to 1.7 billion. So I like the platform. I like the use case. I like the token. I like that you have to use the token. It's not just governance and staking. You have to actually use it to mint the synths. So that makes sense to me. Sort of use it as your underlying collateral for those tokens. This is transaction counts and average transaction values. Transaction counts are down to multi-month highs, or multi-month lows rather. Certainly not bullish. For something like SNX that isn't just governance tokens, it's actual usage of the token itself to mint those synths. You don't want to see this declining, and this is a significant chart for me showing a lack of activity recently on the synth side of things. And here's average transaction values, which popped way up in mid-May, and now are back down to multi-month range lows. NVT historically has been rather high, but since the synth stuff sort of took off, NVT dropped considerably. It's still up significantly since late May, so you can't be bullish on anything that looks like that. Active addresses have declined significantly as well since January, so everything I'm looking at is just down and to the right instead of up and to the right. So it's hard to be bullish on token price when you see this. Ultimately though, because you need the token for short exposure, if you are entering some derivative on the short side, you still need to buy and hold the token to be short. So you'd expect a decreased drawdown relative to everything else because you actually need the token to use the protocol. But if no one is using the protocol or the token, then price isn't going to go anywhere, regardless of volatility one way or the other. If no one's using it, who cares, right? Synthetix, Google Trends are also down basically to range lows seen in mid 2020, big spike in January, February, March, along with everything else, and that's all declined again. So it's getting tougher and tougher to hold SNX if anything, based on technicals, this is the 365 MA. This is 5 times that MA. Historically, with an N of 2 rather, this has been a buy zone. Anything below this level since 2019 has reached the 5x multiplier. So for me, I'm thinking on the Enzyme stuff, I really don't want to get rid of this at this low, but I also don't want to stick around for sub 550, sub 250, right? Although this moving average multiplier looks significant and real, overall, the token hasn't really been in a bear market for an extended period of time. It's had significant drawdowns, and that's what this could be here, which is what it's signaling as a buy. But if it's not, you're super wrong, right? You're eating another 50% drawdown basically. But this multiplier did pick the highs. They sniped them, right? Almost to the dollar every time. So the market clearly could not handle anything higher than that multiplier. So in the future, if this does turn out to be a buy, I'd be looking at this first to see what the sell signals look like. Here's the half year MA. And when I'm trying to figure out, what do I use? The 183? Do I use the 365? Do I use the 730? It is curve fitting because you're looking at the highs and the lows. You can see that with the 183, it didn't pick the highs. It doesn't give me a sell signal. On the highs where it gives me a sell signal here, it gives me a buy signal here. So even though we're already in the buy zone based on the 183, it did not pick the highs well enough for me to even consider that value to use here for the multiplier. On the cloud, we're far below the cloud here, and it's reminiscent of mid-2020. And you generally don't want to be holding, when we're below the cloud, when we're bearish on trend metrics. What might save this is the TKC clamp that's forming, suggestive of oversold conditions. But really, the next support down is the previous consolidation, which is 550, 450, somewhere in there, which is, 50% drawdown from here. Here's the 50 and the 200, which will have a death cross for the first time since mid-2020. And, again, you can't be bullish on bearish trend metrics. But the trend metrics are trying to help you out here, telling you there's a time to be bullish and a time to be bearish, and now is not the time to be bullish, even though the previous death cross was basically the bottom. This was Corona March. I don't enter longs on death crosses, right? Regardless of what this looks like. You want to enter the long on the golden cross, hold until the death cross, and let it go, and be ready for the next trade. There was also a ton of volume up here on KuCoin, which, they don't really have a reputation for having real volume. So I take that with a grain of salt, but there was a ton of volume in this zone. So on the way up, that'll be the resistance, most likely between 15 and 25. Another thing that might save this based on divergences, there's an RSI bull div here with lower lows in price, higher lows in RSI, along with the potential TKC clamp. It's suggestive of a mean reversion sooner rather than later, which is why it's difficult to, take a short here, even sell it here, because it looks like it wants a mean reversion, because it's signaling that it's sold off too quickly. If you look at SNX-BTC, I don't really think there's a trade here. It's just a massive range and doesn't look great for SNX. It's at lows. It's below the 200 period moving average. There's some support here at 24K sats, and the next support down would be at 10K sats. Again, another 50% drawdown. So if you are holding SNX, that's the risk here with all this DeFi stuff, is it's risking a 50% drop. And then on SNX ETH, there is a bullish divergence as well with lower lows in price, higher lows in RSI, but it is bearish on trend on the daily 5200 here. Massive range. You don't want to see a break that range low because the next support down is significantly lower. And that's kind of the theme across all of DeFi. So I like SNX. I like the platform. I like that they're already hooked on to layer 2. I like that there's the actual use case, but ultimately none of the stats line up to be bullish in the near term on this, unless we see the synth minting pick up and those divergences play out for the bulls. Lastly, I'll just mention the ETH-BTC fund that I trade for Techemy Capital and Enzyme.finance, along with the DeFi portfolio. You can see AUM performance, allocations, deposits, withdrawals, completely transparent. SNX is in this portfolio at currently a 9% allocation, and I am able to lend this stuff through Aave. For most of this, most of these DeFi things, it doesn't make sense to lend it because the APYs are basically zero. But when gas fees are low enough, like they are now, and APYs are high enough, this is like 4 or 5%. Oddly enough, the balancer lending is at like 10 to 13% right now. So if the APYs are high enough and the fees are low enough, it makes sense to lend for at least a short period of time. You know, it's better than eating the entire down move every day without some lending component in the mix there. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.